Alright, hey, good evening everyone. Hey, welcome to the new week. So first thing, of course, apologize for yesterday. Okay, so kind of a little bit on the hiccup side, so decided to do it, this evening here. So yeah, with that said, let's get jumping into the markets immediately. Very quickly, last week was very slow overall. Something that I think it's good for us to also take note, right? Especially for some of you guys who are maybe fairly new to swing trading. Um, we don't get trades every other week, right? But I always share typically on average we get about like 2 to 3 trades. Obviously some weeks will get more, some weeks will get maybe less or close to zero. Um, but oftentimes after a impulsive move, right, which we did observe, 2 weeks back, and NFP came out, we had that impulsive move from the markets. Oftentimes, after an impulsive move, we tend to see the market consolidate a little bit, right, or what we call a corrective phase, where the market comes into a retracement, into a correction, and naturally, the corrective phase is just going to be relatively slower in development. Okay, and that's something we do not want to force things in, right? We do not want to force like, oh, because the market is not moving, let's jump into a 5 minute chart and start to squeeze something out of it. We probably just want to stay patient, right? Just stick to our plan. Obviously, if you are already trading an intraday time frame, then by all means. But for me, because my style primarily is on the swing side, which is the hourly and the 4 hour, right? If there's really nothing on the list that I'm looking on a regular basis, and then that's it, right? I don't force anything in, right? But of course, having said that, it doesn't mean that if my list there isn't any opportunity, there isn't any other trades or setups available, right? Simply because I don't look at everything in the market, and that's something that I want you to be aware as well, because the whole objective over here is not to just follow what I do in terms of like the entire list, right? Because some of you might trade other pairs like dollar franc. I know some of you are interested in like Euro AUD, Euro Canadian, Aussie, New Zealand. These are some of the pairs that I don't actively monitor, but of course opportunities can still arise from those. Okay, so the important thing is obviously take the principles that I'm sharing over here, and then of course synthesize it with yourself, the techniques, the strategies that you might be more comfortable with, put them together, and then of course apply it into instruments that you are also interested in. Okay, so with all that said, because last week was relatively in a slower phase of the market where we see a lot of corrections, this is where then building into this week, going into next week, right? This is where majority of the opportunity would then start to come in, right? Because the setup or the principles that I like to be trading on is after an impulsive move, we start to see a correction, right? And we look to get involved in a trade closer towards the end of the corrective phase, and we try to catch the next impulsive move in the market, right? So that's ideally what we want to look out for. Okay. So with that said, let's jump into some of the outlooks and the analysis overall here, and then I'll pinpoint, what are some of the things that I think it's worth noting. Okay. So first thing here is the dollar index. This chart, of course, the data feed we saw here has this spike. But if you look at some of the major pairs, there isn't that spike, right? So kind of take it as an abnormally. We kind of ignore that. So visually, if we ignore that, the market is essentially doing a correction here, right? So what we see is that the market has been pulling back pretty correctively, and it has been taking some time. So we can conclude that in the near term, this can be an impulsive leg. This is a corrective leg. And if we start to apply in the tree wave principle, we can then expect the dollar to make another move lower, maybe come back and retest this low, right? So in the short term, we are, when I mean short term, I'm looking at like this week or even going to next week, right? So relatively, that's consider what I mean by short term. We can expect the market to develop in sets of three, right? One, two, and then maybe one more move down, right? So if I can ignore this week, this area here would be potentially the liquidity areas that the market can look to get before going lower. And of course, if I start to put in the fibs from swing high to swing low, right, that will be around that 50 and 618 zone as well. Okay, so some sort of confluence. And right now, this is the expectation that we can look out for. Okay, so if I start to build in a little bit of details here, then this would then be our current invalidation, which means short term we are expecting more downside, and we are looking to hold on to this view as long as price respect the swing high, right, which is where the invalidation level is going to be. Okay, so what this means is that moving forward this week and next week, we'll be looking ideally for dollar weakness. So if you put that into some of the major pairs, we can then start to look for some confluences or market intercorrelation. Okay, so if you look at euro dollar, then of course we'll be looking at the upside, because so far the pullback seems corrective itself. And of course I'll just put in the 15618 here. You can see confluence quite nicely to where that minor low is, so potentially some sort of a liquidity sweep. And then overall we're looking at one more push to the upside, right? So that's where the three wave principle kicks in. Okay, so whether we're gonna see price really continue to move higher or not, I think the target or I would say minimum expectation is for price to come back and retest this area, right? So our key zone right now is around the 50 and 618, which is at 1.1540 to 1.15. If you can get a corrective pullback, right, then that will be an area that we can look to buy it up. Okay, so that's what we can look out for. GBP USD, so pretty similar. The difference here is of course euro dollar showed signs of a corrective pullback already, but pound dollar here hasn't really started its pullback phase, right? You can see the market is still essentially trading near the top. Okay, so for pound dollar, perhaps we'll need to give it a little bit more time. We would love to see some sort of a corrected pullback before we commit to the upside, right? So then that will be a very clean 1, 2, 3 as well. So this might need a little bit more time on that, right? So I would say perhaps something that's closer within the week would be on the euro instead of the pound. Okay. Then we have Aussie. Okay, Aussie, it's a little bit different from the other two major pairs in terms of the directional focus. So Aussie dollar over here, what I'm seeing is that this pullback is not impulsive in nature. Okay, it's a lot of overlapping move. The candles are not really carrying momentum. Therefore, the expectation here is we might see a rejection back down. Okay, which is a little bit different from the euro and the pound, which is perfectly fine because Aussie doesn't naturally move, in line with the euro or the pound. Right, and what I mean by impulsive, you can see very, very clearly, right? Euro has an impulsive push to the upside, very clear momentum candles. Pound here as well, not really huge candle, but you can see that there's not a lot of overlapping move as price is moving higher, right? But Aussie dollar is very, very different. As price pulls back to the upside, we have candles that are overlapping one another, so that carries a little bit of a corrective nature. So that's the part where I'm actually more in line in terms of expecting the price to actually make a move lower from here on. Okay, perhaps coming back to where that previous low is as well, right? And then that can also complete a bigger three-wave development in a way, right? So what I would like to see here as part of a confirmation of this down move is price taking this low with some sort of a momentum, right? We want price to come down fast. Okay, if we can get that, then the pullback would give us a sell trade setup to take this down. Okay, so I would say we might get a setup this week on Aussie, really depending on later today going into tomorrow morning how price is going to develop from here on. Okay, so definitely something that I would have it in my watch list. Given the right conditions, we're gonna have a potential sell trade on the Aussie side. Okay, then moving into the dollar Canadian side. Right now I'm still looking at this as a potential scenario of an upside move. But I'm still very open to the idea, right? Looking at this push, um, we might still see the possibility of a bigger corrective, which means price comes back, make another push down towards 618, develop this as a three wave, then only start moving higher. Okay. Now overall directional bias on this is still likely maintaining a bullish bias. The only difference is, are we going to see the push from here on, or are we going to see the push up, after price make another low first, which is very possible. Okay, why I say that is because, again, you want to look at how price is developing at key areas, right? The reaction of the 50 is not impulsive itself, right? It's bouncing, yeah, but it's very slow. Okay, it doesn't carry momentum. So that is the subtle difference when we kind of cover, why understanding or identify impulse and correction is so important. Okay, because how price react off the key level give us that slight hint in terms of the expectation that we can have, right? So if this is very corrective in itself, then our expectation is this can still come back down first, then maybe made an impulsive move, then that's where we start to look for upside. Okay, now if here on price just made an impulsive move, bounce up, okay, then that tells a different story. It means that, all right, this reaction is strong, and we'll just wait for the correction and we'll start to take it to the upside. Okay, so sometimes it's important to observe how price is reacting off a certain area and not just whether it reacts or not, right? How it reacts, how price develop, give us the extra layer of information in terms of how do we want to forecast and project, what would likely happen next. Right. So that's on dollar Canadian, right? So for me, I think right now it's really nothing that is standing out. There's no real clear setup that I can really look into at this moment. Okay, so dollar Canadian, I'll just leave it for now. Gold. Sorry, before we jump into gold, dollar yen. Okay, so dollar yen is something I'm looking out for since last week, right? But of course, as I mentioned, the market is just slow. So this is in the pullback phase. Ideally, what I want to see is a continuation of a corrective phase, where we don't want this to suddenly just push up too fast. If I zoom out a little bit, okay, what I'm looking at is a very, very simple channel structure. We have NFP giving us that very nice little impulsive move, push to the downside. So a pullback here would give us an expectation of a three-wave development, right? So that's like one of the clearest directional bias I can actually have here. Okay, we have a clear channel structure, we have an impulsive drop to the downside, the market is doing a corrective pullback, we have a three-wave structure that hasn't been completed to the downside, so we are in anticipation of that, and that establishes a bearish bias. Right, so with that, then that's where you can go down to the lower time frame, and then of course you can see on the lower time frame here, this is where the setup is, right? I mean, this setup is not the most ideal kind of perfect setup because we do lack the element of a liquidity sweep, right? We don't really have that. We just have the market doing a V-shaped reversal. But of course, we don't look for perfection, right? For me, over here is just an assessment. All right, on a high time frame, we do have that. Okay, kind of like this momentum candle, very, very clear market imbalance. If you're familiar with some details of SMC, right, you can even say that this here is a inverse fair value gap, right? Because this has momentum, and then the momentum to the downside actually overlaps the previous fair value gap, right? So that also adds some layer of confluence to that. Okay, so again, overall, when we keep things simple, this is how the setup looks like. If the market continues to pull back towards the 67 fit, which is around 149.50, that's where I'm gonna look to execute a sell trade, right? And of course, our stop is above, and then our target, to be conservative is where the swing low is, right? But of course, if you want, you can really target and go for extended target. You know what I mean is you can look for targets at the bottom, okay? Which if I kind of just stretch this here is somewhere around 145 even number, right? Which is a psychological area as well, okay? So definitely keep a lookout on the dollar yen, okay, for the setup this week, okay? Then we have gold, okay? Gold did make a pretty nice little downside push here, right? So we talk about the higher time frame first, right? On the 4-hour, what I'm looking at this moment is a very simple 1, 2, and then of course we're in anticipation of this third move, and the internal of this is basically a 1, 2, 3. Okay, now just now earlier I talked about not only how price is reaching or reacting off the key level, but you want to ask how, right? It's not just about, oh, it's there, right? You want to ask yourself, like, how did price react off it? How did price reach a certain key level? So this is another good example, right? You can see the 618 fit retracement is there. How did price actually react as it approaches 618? You can clearly see that this is developing as a what we call a crawl pattern, okay, which often indicates a slowdown in momentum and a potential reversal. Okay, and what we see next is the market actually made a move down, right? And we managed to kind of minor tick up that low. So what I'm looking at here is gonna continue to carry on my expectation where this can be an internal three-wave development, right? The one thing I would just be cautious here, of course, is that if this is just gonna be something like this, right, which means it's just gonna do a three-wave move and then this can still go back up. But that's fine, because even if that's gonna be the case, you know, on the lower time frame, we would have take our profits off this level to be conservative. Okay, of course we can always aim for extended target if you want to, but the bare minimum is on the lower time frame is if we're gonna sell it, we're gonna have our entry somewhere there, and then our target to be conservative is just where that swing low is, right? So even if this is just gonna be a temporary pullback and then this will bounce up, we'll be able to exit that trade anyway, hitting our target, right, with a very, very positive risk to reward ratio of 1:2. So that's something to be aware of course. You know, if you're going for extended target, looking for longer kind of like horizon projection. The other thing you want to be aware of is that this entire pattern itself can be a triangle eventually. Okay, it can be a triangle event. I mean, right now I'm just doing a simple expectation of a three-wave move. But what can happen over here? Let me just see if I can do that. Probably not. Okay, I don't want to disrupt everything that I've drawn. But basically, I would like to hide all the drawing, right? So if I hide all the drawing, maybe I'll just take a taker line. Okay. This can eventually, as an alternative scenario, turn out to be a 1, 2, 3, 4, 5 as a triangle and then a pushback up. Very possible as well. Okay, but if that's the projection, it's fine either, right? Because if price doesn't reach it, it's fine, right? Again, as I mentioned, we are looking at this move. Even if you go for extended target, this can be your next conservative targets to aim for. And then maybe this will be your like final target if you really want to go for that, right? So this is where scenario planning also helps to build the context and the confluences, right? You realize that in two of this variable situation, it's okay for our sell, right? I mean, at the end of the day, it's still looking at that same direction. Okay. So with that said, right, that's where if I go down to the lower time frame, okay, there are obviously the criteria that has been fulfilled. If I'm gonna just readjust this a little bit, okay, you know, as price continue to move lower, you just do adjustment on that. We have that valid setup, right? I mean, we have the highs gets broken, right? So we call that the liquidity sweep you have multiple highs get broken, and of course this is the corrective nature of things. Price came down, not the most impulsive manner, but to me it's still pretty acceptable, right? We're not looking for perfection. I keep emphasizing that. Okay, we still have, all the lows gets broken, right? So to me it's perfectly fine. So if we can get some sort of a pullback, that will be a sell setup. Okay, yeah, so that's something that we can look up for this week as well on gold. Now if you go over to silver, to be honest, very similar. The higher time frame structure is a little bit different, but overall the expectation is aligned, right? We're kind of also looking at some sort of a three-wave move. Even on the higher time frame, you can see this pattern, right? Liquidity sweep, breakup structure, pullback, currently reacting pretty decently off the 618. Okay, so if I were to go down to the lower time frame on silver, okay, what we can also look out for, of course, this stretches a little bit to the left, but we can still see that previous high has been swept, right? And then on the inner side of things, you can see a lot of all these lows has been broken. Okay, the difference in gold and silver on the lower time frame is this portion of things, right? So you can see silver coming down, it's corrective in nature, whereas on gold it carries a little bit more momentum. Okay, so that's the reason I'm actually more focused on gold right now as compared to silver. But things can be updated, right? I mean, if today silver just decides to do a pop to the downside, right, then we can see this is an impulsive leg. Now obviously that pullback would present itself as a very nice little sell opportunity to the downside. Okay, and then we'll be looking at this as a three-wave development, something like this, right? So gold and silver, those are the views that you can look out for. Okay, then moving next to crude oil. Okay, we are currently breaking that low. Obviously this leg is impulsive in nature, so we're just waiting for that correction to give us that confirmation that, all right, that's a continuation. Okay, but as long as price is still at the bottom here, you probably don't want to be selling it. Okay, but if price just continue to develop a crawl, that might eventually build into a short-term buy opportunity, because if that's going to be a crawl, if the market gives us an impulsive leg, we can then expect a three-wave move to the upside. We can trade this leg. Okay, but of course that's going to be something like not within this week. Okay, so we have like ample time to just look up for it if that's going to be the case, right? So this one here, really nothing much as of now. At least for this week, I think crude oil, nothing much that you need to be looking out for. Okay, then we have the S&P. So what we have here on S&P, right, is we have this very nice little V-shaped bounce, right, off a key level. Okay, of course this you can see it carries a little bit of momentum as well, but so far we have yet to see any sort of a corrective pullback, right? We would love to see the corrective pullback to give us the extra confirmation that price will continue to the upside, right? Because an impulse correction combination is a continuation pattern. If you don't see that, then of course the odds of a continuation may not be necessary there yet. Okay, so that's why you can see over here again, the expectation is we get a corrective pullback, we expect upside, right? If you don't get a corrective pullback, things might change. Okay, so this, you need to just be a little bit patient right now. Just bear in mind that what can happen is this high hasn't been taken out. Okay, if you don't get a corrective pullback but the market just comes down impulsively, right, that changes things, because then short term you can look to sell this, and then you can expect something like that, right? You can capitalize on this short term sell, then maybe after that they push up. Okay, so you want to be flexible in your analysis, right? You want to be aware that while we have a primary scenario, what is the alternative scenario that can happen. Okay, and when you prepare for it, and you are aware of like what you want to see in terms of price development, then you'll be able to kind of like mentally prepare, you know, 1 or 2 steps ahead of the market, and then you'll not be surprised when things happen, right? You'll be like, all right, if this is going to be the case, I'm going to follow this plan. If B is the case, and then we're going to follow plan B, right? So that's the whole idea of it. Okay, so yeah, so I hope you can also see, you know, from S&P is a very good example, like what we can expect. If a correction is this, we're going to look for upside. If market decides to just come down a little bit quicker, we can potentially look to sell it in the near term, and then this would turn into some sort of a pattern like that. All right, so we are going to be very, very flexible depending on how price is going to develop. Next is the pound yen, right? Its price is still basically pushing higher, so basically we're definitely bullish right now, right? You can see that the market even take out all this high here at this very moment. I would say a 10. Okay, but the whole idea of this is very, very clear. We are gonna be maintaining a bullish bias, and we just wait for the correction to happen. And if that's gonna be the case, we're gonna look to buy it. Okay, and of course, this is the current invalidation level. Okay, very clear. And the thing about this is, whenever you see the market currently at the tip of a high point or the tip of a low point, right? This is moving higher, so we are at the tip of a high point. You just need to give it time, right? As I mentioned, if the market just ends off as an impulsive leg, just give it time. Okay, so nothing much on pound yen. Pretty nothing much on Aussie yen as well, because we're just basically wanting to see a corrective pullback before we really jump into anything. Okay, so just be patient on that as well. Pound odd, it's still really within that consolidation range. We'll want to see price break out of this range with certainty, right? What I mean is, you don't want to see some sort of a break like that, okay, where it breaks a little bit, but then it doesn't really commit to the break. You don't want to be within something like that, right? You want to see if this is going to break above. You really want to see a clean break, like right, very, very obvious break and close above. And then if that's going to be the case, the pullback opens up that buy setup for us. So same thing here. Price is basically still within that range. We're just going to keep an eye and wait until price really decides to break out of that. Okay, next is Bitcoin. Okay, then we'll start to look into some of the lists that you guys might want to look in. Bitcoin, okay, this is definitely very, very corrective. You can see that bounce higher, break out of that channel. So definitely expectation here is continuation to the upside. We are pulling back a little bit. Ideally, we want to see a 3-wave development towards the 50 and 618. So the area of interest here is the 115900 to 117130. Right? If we can get a decent 3-wave structure back towards that zone, that would be an ideal area that we can look to buy it up. Okay. Kind of highlighted this before. I think Bitcoin here would continue to make all-time high. There's no reason to be selling it at this moment unless there's fundamentally something that's impacting the crypto market. But overall here, it's definitely a bullish structure, right? It's definitely a bullish market. Okay, so the direction of bias is there, right? So you basically just want to focus on the upside of things. Okay, so those are the things that I'm looking at. Obviously the closest opportunities that would probably be within the week would be the dollar yen as well as gold. Of course, gold, we probably need to still update it as price continue to develop, because we're still pretty close to that. If price just keeps dipping correctively, as I mentioned, you know, we might even get a short-term buy if that's going to be the case, right? We'll see, right? We'll see as market continue to develop from there. Good. Okay, so those are the two things. cool. I see some of you guys are chatting in utilizing the chat as well. Okay. So yeah, I see Alan is here, Emmanuel is here, Marvin is here, Noval is here as well, right? So Noval has a question on Euro CAD and CAD Yen. Okay, so let's take a look at Euro Canadian and the CAD Yen, right? So let's take a look at CAD Yen. Cool. Okay, CAD Yen is very obvious on the 4-hour. Okay, so one of the SMC model that I kind of use on the lower time frame is essentially this, right? We have a break of a high, didn't really break a lot, and then the market came down and take up that swing low. All right, and in the process of coming down, you can see a huge market imbalance, right? If you're familiar with that, this is what we call a inverse fair value gap, right? Because previously we have this fair value gap here to the upside, and then the market just literally break through that. Okay, and then of course with that, if you start to pull in the FIB, okay, 618 kind of confluences with the area of that, so we are expecting something sort of this, right? I mean, the market can come down a little bit more first, and then maybe start to pick a push up, but the bias here is bearish as of now, right? Just based on this structure. Okay, and of course you can see this is corrective in nature, right? You have the impulse correction, and then we expect one more 3-wave structure, right? 3-wave development. So very clear, right? Very clear in terms of the structure on CAD Yen. If I were to zoom out, to be honest, there might be even more downside opportunity, right? Because what can be looking out for here is this entire leg. This can be the start of the correction. Okay, then the pushback. So this can be something quite interesting to look out for. Okay, yeah, so definitely something there, right? Again, I'm not actively looking at CAD Yen as I mentioned at the start. Doesn't mean that opportunities are not there, right? So again, if you go down to the lower time frame, okay, you can see that that's where the fair value gap is, right? If you want, you can even like make it a little bit more specific on the lower time frame, right? So yeah, that's where your opportunity is for CAD Yen, right? So very clear. Okay, so hopefully that helps on CAD Yen. Next up is the Euro Canadian. Okay, so let me just clean up a little bit on this. We'll re-look at it. Okay, great. So Euro CAD, if you look at it, without the context of things, right? I mean, if you look at this as a replay, okay, what we have is very nice little double top, right? And of course, you can also see that this low has been taken out. If we get a pullback, ideally we expect one more push, right? But today I did mention, right, it's not just about the pullback, it's how price develop. I think that's the important aspect. Okay, so the important aspect is how price is going to pull back, right? If you're going to look to continue to the downside in sets of 3, we want this to be corrective in nature. Okay, so what's a good example or comparison is you look at CAD Yen, right? Okay, let me take this away. You look at CAD Yen, the pullback is corrective in nature. Okay, if you look at Euro Canadian, that initial push here, you can see it's already impulsive in nature, right? So that's that early sign to tell you that, all right, maybe price may not really develop something like that, because why? This is more like a V-shaped formation. Okay, which give you an early clue to be very quickly adapt to the market, because the market is giving you sign, right? It's telling you, all right, I might not be developing based on what you initially expected. It's time to shift. Okay, so something you need to be very familiar with is also pattern possibility, right? Because in this case here, in an Elliott wave perspective, this can be this itself, right? You can see the expanding structure can be what we call an expanding flat. Okay, which to be honest, we don't always expect an expanding flat until it more or less develops, and then we'll look at it from an angle where, all right, this is the potential pattern that can be the case. Why I will put that as a potential expectation is because this is impulsive, which means that likely this is the correction. Okay, so after the correction itself, this is impulsive. If we get a corrective pullback, that will open up more upside from here on. Can follow the thought process, right? So Euro Canadian, again, we are trading kind of like near the top right now of this move, so you just want to be at a state where you be patient, okay, and just wait for price to do some sort of a corrective pullback. Again, you can see this is where the fair value gap is. You know, that would then give you an opportunity to buy if that's going to be a corrective pullback. Pretty clear cut, right? Good. Hope that's clear for Novell as well, and you know, for the rest of you here. Sunajo asks, gold daily chart, there is a fair value gap, isn't it? Daily chart. Okay, let me just go back to this feed. Okay, yeah, I mean, if you zoom in a little bit more, and if you're referring to this, it is. But to be honest, if you go down to the 4-hour time frame, you do see that there as well. Right? You do see that in the momentum candle as well. Yeah, so there is that fair value gap. But in the priority of my analysis, we don't start off by identifying fair value gap, right? The process I start off, okay, which I think would benefit everyone over here, is to walk through the process of what we call the DSC framework. Oops, not. Okay, give me a while. Let me just open up a new chart. Okay, so a blank canvas so I can really draw things there. Okay, so it's important for me to actually have everyone to also understand this thing called the DSC framework, right? Which you might have heard me share for a couple of times. Okay, so what is the DSC framework? It basically stands for direction, setup, context, right? And identifying fair value gap is not something immediately you want to do when you open up a chart, because there are bigger picture perspective that you want to first understand and establish. Right? So the first thing here is direction, okay, which you know I call directional bias. Again, there are many methods in which we can determine direction, right? You can use indicators, you can use support resistance, you can use fundamentals, you can use seasonal factors, you can use price patterns, etc., etc., right? So for me, I base on the principle of Elliott wave, right, which is simple at the same time, can be quite sophisticated depending on how deep you want to go into that. But the simplest understanding of Elliott wave is always back to the basic model of impulse versus correction, right? Which basically, if you see an impulsive move followed by a correction, you would expect high probability market continue to the upside, right? The opposite is if the market comes down impulsive, that's a correction pullback, you expect this to continue lower. That's what we call impulse correction, right? It's a pattern recognition to give us the directional bias of this, right? The other pattern you can look out for is basically an impulse and then after that a crawl. Oftentimes this pattern indicates a potential reversal. Same thing here, right? If it comes down fast, does a crawl, it's a potential reversal, right? So again, this is building up what we call a directional bias from a simplest Elliott wave model, okay? So case in point, right? Today, if I bring you to, right, back to this example, right, a little bit of forecast. If you see a corrective pullback, what do you get? You get an impulse correction, right? So what's the directional bias? Bullish. Okay, so as simple as that, right? But of course, then we start to add layers of element into that. Like we expect a three-wave move, right? If the market completes a three-wave move, we need to be a little bit cautious and factor in a little bit more things into it. Then we can add layers of like on top of the internal structure, what's happening on a bigger scheme of things, right? We zoom out a little bit. So we have a context of things, right? So a little bit overlap on that. Then we also can add in layers of Fibonacci's and things like this, right? So essentially, that's the first thing, right? We always want to establish direction bias first so that we can have a focus in knowing, do we want to buy, do we want to sell, or do we have no clear direction, right? So again, case in point, you can see today, pound on, right? There's no clear direction in place. We just want to leave it aside. Okay, or if today things just move out as an impulse and then it ends off there. Yes, we have a momentum bias, but we don't have a bias that we can execute trade on, right? Because there's a cover just now on pound yen. You want to wait for a corrective pullback before you have a potential trade that you can take. Okay, so that's the first layer, right? Direction. Then where the setup comes in is when you have a clear direction you can focus. You need to then move on to the next stage and identify where to enter, when is the best time to get involved, what price to get involved, where to get out, when to get out, right? And this is where aka the strategy comes in, the conditions and the criteria of your setup comes in, right? So case in point for me, I uses the combination of SMC model, right? Where we have the conditions and criteria that we need, such as liquidity sweep, break of structure, change of character, right? You want to see that fair value gap, market imbalance, which is basically an impulsive move. Okay, then we wait for the pullback and then we add in the Fibonacci retracement level in it. Right, so setup, you can just understand it as what are the conditions required for you to execute a trade, right? Again, every trader will have slightly different setups, right? If today you're familiar with, let's say, volume profile, right? You can use volume profile as your setup. If you're using order block, right? Order block can be one of your setup. Support and resistance, for example, right? Patterns, right? Chart patterns, right? You can use harmonic patterns, for example. Right, so there are again many different setups that you can use to execute a trade. But for me, I just use the SMC simple model to kind of incorporate that in. Okay. So when you start to identify fair value gap, right, it's actually to me part of a criteria within my setup, right? So you can see like how this whole process works, right? How identifying of that fair value gap is just that one aspect of the whole big picture. Okay. And then once we have a setup, then the last thing here is the context of the entire thing, right? Now I have to put context at the end, but you do realize that as we are going through the process of this, we interlay context into the whole process, right? Because sometimes on the direction phase, when we're analyzing for direction, we add in the context element already, right? When we're in the setup phase, we also add in context onto that, right? Because today, if I look at gold trade here, yes, it's a valid sell setup, okay, but I did share a little bit in terms of like, right, we don't really see a nice little impulsive leg here, but I'm, okay with that. That's actually a little bit element of the context aspect, right? Because why am I okay with that? Because I'm also considering on a higher time frame, some layers of confluences, right? So that's aka what we call context, like small little details and other elements that contribute to the trade conviction, right? How confident are you in that trade? How comfortable are you in taking and executing that trade, right? So these are all elements of what I call context. Okay, you can even add in layers like today if there's a high impact news coming, maybe I don't want to take a trade, right? So that's also a context, right? So yeah, so again, hopefully this little kind of like walkthrough give you a better understanding of the DSC framework over here. Okay, and again, this is quite universal if I were to put it that way. There are many methods and methodologies you can use to achieve the same outcome in terms of clarity of direction, setup, and context. But of course, for me, I use Elliott wave combined with SMC model to approach it, right, in terms of like using the framework of DSC. Good. Okay, so yeah, hopefully that's clear. Cool. Right. So yeah, I hope this week's session here give you guys some clarity into the framework as well as the outlook for the week itself. What are some of the things to look out for? Okay. Yeah, today's session is a bit longer, but hopefully the last part here kind of covers um some of the insights that might give you some clearer picture in terms of how to approach the markets itself. Okay. Cool. So that's all from me for this week. Okay. All the best. We'll see how the market continue to develop from here. I'll keep you guys updated, as we progress for the week. And I'll see you guys in the next session. Yeah.